Hey guys, it's Aundrea Beach-Greco. I wanted to reach out, say hello, let you know that I'm thinking of you, and during this time that we're in quarantine, hoping that you and your family are safe and healthy and adjusting to all of the crazy things with, if you have kids, you're homeschooling, if you are working in this new normal, working from home, whatever that is. I'm sending my love through the computer and I'm hoping you're well. And the reason I'm doing this video is I've been getting asked quite a few questions and I want to just make sure that I've answered them. And we've gone through some of the most asked questions to help with educating you and ease your mind. So first and foremost, people are asking, aside from the normal, how are you? If in fact real estate is on top of mind, is this like 2008? If you've experienced that, this is not 2008. So in 2008, the banking system was not posed to support the crash. Today, this is not from the banking system. This is stemmed from coronavirus and unemployment, and those will pass, right? So there is no correlation. Again, most people, that's the last thing they remember. So they revert back to that memory. But this is definitely not 2008. And some of the reasons why is that, you know, when we've gone through recessions, and the definition of a recession is when GDP starts declining. And the recession, for most people that you recall, has been a sharp decline in prices for home values. And what we have found statistically, if you see in this graph, is over the last 5 recessions that we've had, home values have actually increased. So we wanted to just make sure you're aware that don't panic. There's going to be a slowdown. Values will deflate a little bit. But overall, Vegas is a strong market and we will see things level off and start to appreciate again. So with coronavirus being short-lived, and we all hope this will pass soon, this will be gone through the past and looking back going, wow, remember that time we all had to sit at home, do all these video calls, couldn't touch each other, couldn't see each other. We'll look back, but again, just to reiterate, prices are probably going to fall a little bit, but once this is over, it won't be a threat any longer. First question people are asking, you hear the news, you heard it at the beginning of March, the Fed lowered the rates to 0%, and everyone's wondering why interest rates on mortgages are not 0%. Well, let's just go back a little bit. The Fed, when they lower interest rates, they're lowering the interest rates that they lend bank to bank. So the banks lending to each other, they get 0%. The banks lending to the consumer, like you and I, we don't get 0%, right? They're in there to make money. So if they lent at 0%, there would be no profit margin. Therefore, interest rates on mortgages are not 0%. They are at historic lows, and they're amazing and they will continue to be amazing, but they're not 0%. The other things that are affecting currently why rates aren't lower, they should be, but we have capacity issues, margin calls, and the CARES and forbearance concerns. So the first thing is capacity. You know, in the beginning of March, when the Fed announced the rates, because of the misconception, everyone came out of the woodwork to refinance. Lenders just can't handle the volume. So to offset that, they've raised their interest rates to curb applications. Next, we have the margin calls. Margin calls is when someone has locked a loan and then they've decided, you know what, the rate's lower, I want that one. And the lender has already hedged that loan in the secondary market, and now the client wants something else. it's caused an influx of margin calls and problems for those lenders. Last but not least, the CARES Act and forbearances. The CARES Act is the new program protecting people when they go into forbearance so that there aren't detrimental impacts to them. But as you can see is when you make your mortgage payment, that servicer still has to pay somebody else the mortgage. So if you don't make your mortgage, they can't make their mortgage. So it's a domino effect. And with millions of people unemployed, as of today, there's over 5.5 million people unemployed, the ramifications of that on the banking system are going to be detrimental. So that is why interest rates are currently higher than they really should be. Once some of this evens out, pipelines clear with lenders, the rates should drop back down. Historically, here's a kind of a graph of where rates have been the last couple of years. We are in historic lows. I realize people have a short, what do we want to say? A short recollection, and their friend got 2.875 and I want 2.25, but realistically, that's not where rates are going to be. As you can see, this chart here, beginning of March, was where it hit that 50-year low, and currently we're in that mid threes, and we'll probably stay there. We're yet to see. Stay tuned. Second question I get, how long do I have to wait to buy after the quarantine if I was furloughed or on unemployment? Now, there aren't any wait times. If this continues past 6 months, then we have to talk about wait times. But initially, there are no wait times. You just need to be back to work and show a pay stub with your 40 hours or your employment that you work, whether that's your 32, 40 hours. What's considered part-time or full-time for you in your position? Number 3, does collecting unemployment hurt my credit score? No, but there's unintended consequences with that, right? If you're on unemployment, obviously you're not making the same amount as you were, and then you have to budget. You have to decide, what bills are you paying first? Mortgage, food, your basic needs are important. Then you pay your cars, your credit cards, and the other things. But it does require a budget. So if you start falling behind on your bills because you're on unemployment, yes, that's going to affect your credit score. But otherwise, you'll be fine, and just pay attention. You might have to write out a budget and be more mindful of things during this period. Number 4, is it a good time to refinance? Well, if you own a home currently and you saw the rates were in the 3s, it might depend. Everyone refinances for different reasons, and a home loan is unique, just like you and I. So therefore, it's important for you to evaluate if it makes sense. Get with your lender. Hopefully you're reaching out to me. We'll do a total cost analysis and see, based upon your goals, what are you trying to accomplish? Are we trying to lower the payment? Are we trying to pull money out for other things? Are we trying to consolidate debt? What are we trying to do to make sure that there's a benefit? Some facts, just so you know, the average person is staying in their home 7 to 10 years. We have mortgage rates at all-time lows. Unfortunately, we've been pretty happy over the past few years, and Americans carry the highest amount of mortgage debt, student loans. We are a debt-heavy society, so those are some downsides to being in a good economy. So here's your plan. Pay your bills on time, especially if you have a mortgage. You do not want to get into a situation that because of this, it has ruined your credit and you have to start over. Keep in mind, as currently, if you go into forbearance, and you absolutely have to, and that's okay, it could have consequences. At the moment, if you go into forbearance and you try to refinance later, you have to wait 12 months of timely payments. So you have to be strategic. If you need the forbearance, take it. If you don't, pay your bills. Get your credit scores up. This is the time now for you to research. Inquire, we can help you. guide you. Let's work on getting your credit scores up. The higher your credit score, the lower the interest rates on everything: cars, student loans, autos, mortgages, everything. And finally, don't panic. I know it's tough. I have days where being in isolation is tough, and I have to just drive around the block to pretend I'm going somewhere. But I get it. And most happy, be happy. It's difficult. Some people are really enjoying this time with their families and being home, and some people really aren't doing well with it. But either way, please try to keep a positive mindset. Be happy, stay safe. If I can help in any way, please reach out. I'd love to help you. Answer any questions. We'll talk to you soon.